Hi students, welcome to my class Accountancy Simplified. In today's class, I shall discuss an important item, that is financial statements. It is very important from the point of view of examination and sound knowledge on accountancy. Now, what is the meaning of financial statement? Financial statements are the summary report of the financial activities and position of every business and other entities for a particular period of time, prepared by its management for presentation before its owners and other stakeholders. It comprises of three major statements like cash flow statements, income statements, and balance sheet. Cash flow statement is mandatory for corporate entities, and cash flow statement is not mandatory for non-corporate assets. Income statement comprises of trading and profit and loss account. Now, what is the importance of financial statement? Financial statement communicates to its investors and creditors and lenders many important information as to the financial activities for ascertaining the financial health for future decision by those agencies. Legal and taxation authorities do obtain information from these financial statements. Now, who are the users of financial statement? Stakeholders and owners, creditors, lending agencies, taxation and legal authorities, and financial analysts, and banking authorities, which lends financial assistance to the entity. Now, I have already told that income statement comprises of trading account and profit and loss account. Now, I shall discuss what is trading account. Trading account is the annual revenue account prepared by every profit-seeking organization at the end of a financial period to ascertain the gross profit or gross loss. The nature of this account is that of revenue account. It belongs to nominal account, and accordingly all expenses are debited in this account and all incomes are credited. All running and operating expenses are debited and all operating incomes to appear in the credit side of trading account. Trading account is very important for the management as it determines the gross profit or loss of the company or the other entities, and helps in management in deciding whether the net profit margin will be enough to, after taking care of administrative, selling and distribution expenses. It also helps in comparison of the performance of the company of the previous year with the current year, and the trend of the industry as well. Whether the gross profit ratio as determined by the trading account is in line with the trend of this industry. Now, I shall discuss the treatment of closing stock in trading account. Closing stock is the unsold stock at the remain in the custody of the traders at the end of a particular period of time. Closing stock is treated as opening stock. Closing stock is treated as opening stock in the following year as it is sold along with purchases, and it is accordingly debited to trading account in line with purchase account. On the other hand, clothing stock is credited in trading account to adjust purchases and to bring a parity between purchase and sales in terms of quantity to arrive at true gross profit and loss. Clothing stock generally do not appear in trial balance. If clothing stock do appear in trial balance along with adjusted purchases, then clothing stock will not be adjusted once again in trading account. Only when trading account clothing stock is not there in the trial balance, we shall credit clothing stock in the trading account to adjust purchases. Clothing stock is valued at cost price or market price, whichever is lower, in terms of principle of conservatism. Now, what are the contents of trading account? All the direct expenses like opening stock, as we told earlier, purchases, net, that is after deducting returns outward, wages, carriage inward, and other direct expenses. And the credit side, the operating income, that is sales, net sales, that is after deduction of returns inward or sales return, is credited in the trading account. If the credit side is higher than debit side, it determines gross profit, and if it is otherwise, that is, if the debit side exceeds credit side, it results in gross loss. The gross profit and gross loss is transferred to profit and loss account for calculation of net profit or net loss. So this is all about trading account. Before I close my lecture, I once again request all my subscribers, all my students, listeners and followers to subscribe my channel and share and like my channel for better circulation of my channels among the students community of commerce. Thank you. Goodbye.